What is going on, guys? It is Pex and I'm back at it again. You know what I'm saying? It is Pex, the #1 Pex strategist in the world. Let's get down in it. Today we're talking about Fibonacci retracement. Yes, I've gotten a lot of questions. How do you use your Fib Pex? How do you make good entries while the market is still going up? Yes, they are called Fibonacci retracement for a reason, and I'm here to expose the secrets about Fibonacci. Yes, Fibonacci. Don't play. Let's get down with it. I like this thing that I guys usually do. So we're gonna put some sauce on Fibonacci. Let's get down on it. Definitely you don't want to miss out. So turn on the post notification and subscribe because Pex is coming here every Thursday to give you guys banger for banger. Don't miss out in it. Without further ado, I'm gonna catch you guys in my screen. Peace.
So now we want to talk about the usefulness of Fibonacci. Yeah, I get a lot of questions. How do I use the Fib? How can my Fib look like yours? Yeah, if you're confused and you don't know what a Fibonacci is a very utilizable tool, if there's any word like that. This is what a Fib looks like. I know so many of you guys, your Fib can be different from mine, thereby having the background right there. Yes, you can actually customize it. Let me add the background back in order for it to look like just like yours. All right, you can actually customize it, and if you want to customize it, it is nothing other than what following the simple steps right on my screen. So in order for your Fib to look like mine, pause the video and then go through it. I'm going to scroll up for you. You can pause the video and then edit your Fibonacci just like mine so you can utilize it just as I explained. If you go to the coordinates, it is the same thing. You don't need to change anything. Visibility, you don't need to change anything. All you just have to do change is the style. Sorry about that. All you just need to do is change the style. So the next thing you want to do is simple. I'm going to remove this background because I don't use it. Remove it, and yes, we are good to go. Now, how do you use a Fibonacci? If you want to bring out your notes, you need to jot this down right now. Fibonacci, this is a retracement tool. Now, what does retracement mean? If you look at the name, look at it right there, you can see the Fib retracement. Let me bring it up. Let me bring it up and show you. You can see the Fib retracement. Now, what does retracement mean? This means pullbacks. This means pullbacks. Now, I know you must have heard of pullbacks, but how can you utilize the Fibonacci tool in line with pullbacks? I'm going to show you a couple of examples on how you can make good use of it and how you can make money from it as well. This is GBP USD, and this is the only pair I trade for now. All right, because I want to have the in-depth understanding of this pair, the wins and losses, the win rate according to my peg strategy, and the losing rate. You understand? So once I get accustomed to this, then I can fly to any other pair or just remain on this. But in order for me to develop that discipline, I need to be what? Consistent in one thing. And you know, for you to be consistent, you need to be on one particular thing. Master it, do it over and over again, even on the win and the losses, do it over and over and over again. But remember, risk management is very, very important in this game because even if you have an account of $1,000 and you're taking trades worth $20 every single time, you can take up to 20 trades and you've not blown the account yet. But if you start taking trades of $100 each, only at 10 trades, you've blown the account. That is why you need risk management. But I'm not telling you if you use $100, it is not good for a $1,000 account. If you know what you're doing on the chart, then increase your lot size. Without further ado, let's continue. Right now, this is Fib retracement, and as you can see, this is what it looks like. And now, what does this mean? Let me explain what this levels means. Right here, you can see this is 0.5. Now, the 0.5, what does it mean? It means the 0.50. It is known as the 50 Fib retracement. All right? When you get to the 618, you can see it is called the 0.618. People call it this 0.618 area. All right? This is the zone at which people most likely look out for. But I'm still going to tell you in the video what the usefulness of 0.5 is and the usefulness of 0.79. If you ask anybody using the Fib, they're going to tell you that the 618 is very, very reliable. No doubt, it is reliable, and also the 79 is as well reliable as that of the 0.5. All of them are reliable. You just need to learn how to utilize them. Now let us get down in the meat of this video. Now, whenever the market gets to the 50 Fib, what do? Do you trade or do you still wait for it to get to the 618 area? These are things you need to be asking yourself. But then I'm going to be showing you how I utilize it, because I trade on the 50 fib, I also trade on the 7-9, I also trade on the 618 area. But it depends on the way the market laps with my fibs. Now, whenever the market gets to the 50 fib, what does it mean? It means that we have a 50-50 chance of the market respecting that 50% retracement. But whenever the market gets to the 618 area, it means that the market has a 61.8% chance. Trust me, you already know what the 7-9 means. It means that the 7-9, if it gets there, it has a 79% chance of happening. Tell me in the comment section, which of them would you like the market to align with in order for you to place your trade? Do you like the 0.50, which has 50% chances? Do you like the 618 area, which has 61.8 chance? Or do you like the 7-9, which has higher chances compared to all of them? I'm waiting for your response in the comment section. Now, how do you use all of this, including the 0 level, including the 0.27? That's the minus 0.27. How do you use them? Now, let us get down to the chart. For instance, this is a trade that you want to take. Let's say this is a trade you want to take right here. Let's say you want to take a trade right on this zone. What do you do? What do you do in this kind of situation? What you need to do is understanding what pullbacks means. Now, what are pullbacks? Pullbacks are when the market gets to a particular zone, it pulls into it, thereby respecting that zone. Now, what do I mean? For instance, you want to take a trade in this region. Let me show you something. Let's say you want to take a trade right here. And then you didn't catch the market. Let's say the market now started doing this. The market started doing this. You didn't catch the market with all these sales, right? You didn't catch all these sales. Then the market has broken through. Trust me, don't rush. All right? Don't rush. Let me give you the secret. Don't rush. Let me give you a secret to this chart. Whenever the market breaks a key level, it has a 70 to 90% chance of pulling back into that same key level. If you know how to draw key level just as I do, go and draw the key level on your chart and watch how the market pulls back right into it. Take this for example. The market, you've missed out on these moves massively, and you're now eager to place trade. Don't be so scared of missing out. Don't be so scared of missing out. Instead, wait for your perfect entry. Yeah, my name is Perfect anyway. Wait for my entry. When you see my entry, you enter. All right? Then, how can you know that, okay, this market wants to give us a good entry? Fibonacci can help. Do you understand? Fib can help. Then, you understand the law of key levels. Number one law of key level is whenever a market breaks that key level, it's most likely going to retest back to that key level. And then you trade it as break, retest, and it will dump. Yes, break, retest, and it will dump. If you check my videos on this YouTube, you're going to see where I have a break and retest video. That video is long ago, but it still works massively. Break, retest, and it will dump. But now the question is, how are you going to catch that move before it dumps? That is all that matters. How are you going to catch the move before it dumps? Bring your Fibonacci into play. Look at it right there and be like, okay, what is the next level you can place it? Some people are going to place it from here all the way down here. Some people are going to place it from there all the way down here. Yes, you're not wrong. You're not wrong. But if you go to the lower time frame, you're going to get better spots. Do you understand? If you go to the lower time frame, you're going to get better spots. All right? Now let's go to the lower time frame. Let me show you one better spot you can use. Let's go back down to 1 hour time frame. Let's see the spots we can utilize. Back to that chart. Let us see. We have one here. Remember, how do you use the fib? Let me show you how you use the fib. The first thing you need to understand is that Fibonacci are used in trending markets. Only trending markets. Use the Fibonacci in trending markets, you're going to get the best out of it. If you use it in a ranging market, you're on your own. If you use it in the trending markets, you're going to get the best out of it. Now, like I said, if you come to the lower time frame, you're going to get good spots. Number one spot you can use is this one right here. This spot right here. This is the recent high compared to this. Right? So now you drag it Fibonacci, like I said, I used on trending market. The next thing you need to understand is how to use it. You use it from the recent high all the way to the recent low. Like I usually tell my students, I tell them you drag it from the start of the impulsive move all the way to the beginning of the retracement. Now, what is retracement? I said pullbacks. So the start of the impulsive move, which is the bearish impulsive move, all the way downward to the start of the retracement. Then you push it in. Now, what can you observe? You can observe that the market and the 50 fib are close in range. What does that tell you? It tells you that the market has every potential to respect the 50 fib. But note this, you don't trade Fibonacci alone. This is a sneak peek. People don't understand. You don't just come into the chart and be like, okay, I want to trade only fib, and you then drag the fib all the way to recent high, recent low. No, it's most likely going to break past all the fibs. What do you do in this situation? Stick around. I'm going to be mentioning that at the end or close to the end of this video. Now, you see the 50 fib is very close to the candles. Now you need to be very, very cautious, because at this point in time, it is either it's going to break it or it is going to what? Go back down. What do you do in this case? You need to understand candlesticks patterns. I think on my next video, I'm going to be talking about the basic, very important candlestick patterns that you need to know. If you want that kind of video, let me know in the comment section if you would like me to make such video, because it is very, 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 very important to understand candlestics. Because if you don't understand candlesticks, you literally don't understand the language of the market. So now you can see right here that we got different reactions on this level, and which you can see the 50 fib is very close to the candlesticks. Now, like I said, you don't trade fib alone. What do? You make sure the fib is very close or right upon a key level. What are key levels? Key levels are level of support or resistance that are most respected in the market. The word highlighted, most respected in the market, because how will you get all these kind of key levels? These are things that we learn in the mentorship program. So if you want to learn how to do all of this in details, the link is is below to learn the peg strategy. The peg strategy teaches you everything in details. Now, you need to make sure the key level and your Fibonacci are close in range. Just as seen right here. This is my key level drawn before even the Fibonacci was drawn. But you can see that from the recent high, if you adjust it very well, to the recent low, which is right here, the market pulled back into this zone. And what happened? The market started reacting. Now, that candlestick reaction is what we need. Like I said, you need to understand candlesticks. If you don't understand it, you're going to really have problem. It's just like going to a new country you've never been before, and you're hearing them speak their language, and you don't understand their language. How are you going to communicate? It's going to be a real-time problem. It's going to be a real-time problem. So you need to understand their language and speak with them just as an indigene. That is it on this chart. Learn the candlestick patterns and understand what the candlestick is about to do before it does the move, because we are trading the future, not the past. Now you can see inside the different candlestick reactions. So all we need to do is look for our entry criteria right in this zone and then place for ourselves. You bring your short tool and you enter around this region, drop your stop loss a little bit above the next Fibonacci retracement, and then set your take profit in the next key level. That is how you get a very good 1 to 2 RR without stress. You secured 46 pips, risking only 17 pips. Very simple, very easy. I'm going to show you another example again on this other side. Just as seen right here, you can see that the market, after hitting take profit, it progressed all the way to the upside after oscillating a bit, and then it went all the way here. Remember, we are still on the same key level. We're still on the same key level. So what does that mean? It means that the Fibonacci still applies to same key level. Just as seen right there, we got the candlestick, and the next thing, the market tanked, to tell you that the Fibonacci works very well only if you know how to apply it. And this is the best video you can ever get on understanding Fibonacci. Like I said, in order for your fib to be just like mine, you need to go back to the video, this video, to the starting point and pause it, and then change your Fibonacci to this one and utilize it perfectly. I'm definitely going to see you at the next video, because I am now back and fully back for you guys. Pets got you guys. If you want to join the mentorship, use the link in bio to join either the private mentorship, which I teach you one-on-one, or you join the team trading where you learn with the trading program. If you want to make money with us, then you can utilize our VIP signals. I'm definitely going to see you inside my team. Pets got you guys. Peace out.
So you have it there. You don't want to miss out on anything. For sure, turn on the post notification because I'm coming here every Sunday giving you guys back-to-back hits. And as well, if you don't want to miss out on our signals, check the link in description to join the VIP signals. As well, if you want to learn the PEG strategy, link in description. Also, if you want to get the one-on-one mentorship, definitely link in description. If you want to use the broadcast we use, which is EXNESS and other prop firms, Pets got you, link in description. Turn on the post notification and subscribe. Peace in it.